Hey, welcome to a brand new edition of The Rundown with Ramon. I hope your day today is absolutely blessed and absolutely fantastic. My name is Ramon Ray, publisher of zoneofgenius.com and your host here on The Rundown with Ramon. Whether you're watching today's episode and you're feeling absolutely wonderful, then I'm glad I can join you in yet another wonderful day. If you're watching today's episode and you're not feeling so good, then maybe let me know about that, and maybe being here on The Rundown with Ramon for just a few minutes can help to enlighten and uplift your day. Either way, I'm glad you made the decision. I'm glad you've taken the time to join us here on The Rundown with Ramon. All we do is one thing alone, get the top things you need to know to live your best life or start or grow your business. As you may know, I'm Ramon Ray, a serial entrepreneur, started a few companies, sold a few companies, author of several books, and I'm glad you're here today. We got an amazing show for you today. Let me unpack what that show is going to be like for you today. We're going to talk about pricing. That's something I cover quite a bit because I believe it's so essential to business success. Starbucks is raising or not having a little pricing, and we're going to talk about that in a bit. Input from Seth Godin about the ledge. It's really going to be good. Talking about walking, how you can walk better, navigating the cost of launching a startup. There's this thing called gate lice, which refers to people jumping in line on airport lines. I'm going to touch on that for you. Adobe is telling creators, is telling artists, hey, AI is in our products. Deal with it. That's the way it is. You may have seen the headlines that Ernst & Young recently fired employees who were cheating and how they were learning. So we got that and more for you today on The Rundown with Ramon, and I'm glad you're here. Sit back, relax, and enjoy yet another episode of The Rundown with Ramon. All right. Let's go. And also going to cover, if I didn't say it already, do we need another stock exchange? We got some insights from an interview I did with the founders of the Dream Exchange coming up as well. So let's get with it today and talk about The Rundown with Ramon. Ding, 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 ding. Starbucks scales back discounts. I'm not going to even get necessarily into the thrust of Starbucks pricing because that's less of the issue of the day that I want to bring out. But the main thing I do want to bring out is talk about this aspect of pricing. I get it. During the holiday seasons and other times, buy one, get two free and things like this. We lower discounts and bring a coupon and things like this. But as we're looking to build sustainable businesses, I wonder, is pricing, low pricing, and is discounting, is that always good for us? I don't know. And my encouragement to you today, be careful with your pricing. Sometimes you might think, oh, I'm pricing this at $100. I'm pricing this at $50. And you think lowering prices is the way to go. You think lowering prices is the way to get the next customer. My guidance to you today is that's not necessarily the case. That may not be the way to do so. Yes, lowering prices may get that customer to buy, especially if they're conditioned on pricing. But as a small business owner, you're not going to go up against Amazon or Walmart or Costco or a big box retailer, then they're so price driven. You need to have your pricing at a premium. You need to make a profit. You need to pay yourself. You need to provide for your team. You need to provide for your family. Don't you want to build wealth for your community? So be careful of lowering your prices. Just because Starbucks did doesn't mean you need to do it. Ding, 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 ding. Always love some advice from Seth Godin. Seth Godin's latest book is out called Strategy. You definitely should check that out. I bought my copy. But here's what Seth Godin says from a recent blog post. Drowning is devastating, a tragic and painful way to go, says Seth Godin. So much so that feeling like we're drowning is a trigger, an overwhelming emotion that causes us to grasp, struggle, and leave our best self behind. It's easy to experience this even when we're out of the water. When the stakes are high and time is short, we can activate drowning mode, losing our focus, resilience, and generosity. The ledge can be a useful way to talk ourselves out of the spiral. If you're in 8 feet of water, it's easy to feel afraid. But once you realize that you're only a few inches away from a ledge, one you can return to whenever you like, it's possible to reset, to find your bearings. It's not that hard to imagine a ledge. Sure, the parts didn't arrive on time, but our deadline isn't for a few days, back to the ledge. Let's regroup and come up with a new plan. Yes, the project didn't work, but our budget has enough slack in it. We can try again with a new project tomorrow. The ledge is a combination of time and money. It's the buffer between here and disaster. The ledge is a foundation, a place we can find our footing as we think about the next steps. And the ledge offers perspective because we can realize that even if this moment feels momentous, it might not be. Resilient project management, says Seth Godin, and risk taking requires investing in a ledge. When we put everything on the line and cut the timing to the absolute minimum, the stakes get higher and we expose ourselves to failure. Part of the art of innovation is choosing projects we can afford to dance with. And the daily emotional work is reminding ourselves that the ledge is right there so we can refocus and go back to being our best. I hope you got that gem. The ledge is a powerful concept that we can learn in business. Phyllis George. The ledge is game changer. Sometimes we rush and go about wondering, can we do it? Can we do it? But we have that feeling because we don't have a ledge. We don't have a backup. We're overwhelmed. We put too much pressure on ourselves. But Seth Godin says all of us deserve and should have a ledge. Again, glad you joined me today. This is the Rundown with Ramon. Glad you're here. Ding, 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 ding. Question to you. Do we need another stock exchange? I had an amazing interview with Joseph Cicala of the Dream Exchange, where he talked about they're about to launch a brand new stock exchange. We know of New York Stock Exchange. We know of NASDAQ. But have you heard of the Dream Exchange, a brand new stock exchange that's going to launch? And the bottom line, he said, for mid-market companies, not talking about smaller businesses, but those at 5 million, 50 million, 75 million, maybe 100 million, and they want to raise capital for them to grow and hire more people, invest in new products, make more wealth, build up their communities even bigger, maybe not to be the next Boeings or Starbucks or these trillion-dollar companies, Amazon, but to raise money so they can go bigger, hire more people, invest more in the world. They need to raise funds from the public markets. There's a brand new stock exchange coming up called the Dream Exchange, and I want you to check out this interview I did with Joseph Cicala about it. Check this out.
Cicala, I'm the founder and CEO of the Dream Exchange. I've been at this now in my 18th year of,
Congratulations.
Create a new stock exchange in America has been a long journey. But the Dream Exchange will be the 8th stock exchange in the United States. We're in the process of our, it's called a Form 1 application to get our national stock exchange license. Once granted, we'll be a direct competitor of the New York Stock Exchange and the NASDAQ and the Members Exchange, and long-term and investors, there's 7 others, and we intend to be in that marketplace. But mostly what the Dream Exchange, why did we do this? Is to work on capital formation, which the public markets have gotten away from a little bit. There are not very many IPOs at all anymore, and especially to work on public capital formation for small companies. So we want to do a lot of IPOs for small companies that have great ideas. It really is about the dreamer.
And I wanted to pause on this. We often think of IPOs, initial public offerings, where a company is going and saying, we're giving a percentage of our shares to the public to buy and invest in us. They give us money and they get a piece of our company. We think of IPOs like the trillion-dollar brands that we all know, Tesla or Google or other companies like that. But there are so many companies out there that are much smaller, much below the radar, niche companies that need more money to grow, need more money to expand, to hire more people. And one way they do that is for IPO. So it's interesting that there's another stock market getting ready to be launched. Keep listening.
Not to steal the thunder of what we're doing, but
sure,
our country has become great because of our ingenuity. We out-create other nations. And what we want to make sure that we do is the dreamers, the people that are the innovators, the future, the people who think through and solve problems. We need to make sure we get them capital. We need to make sure that, especially in the public markets, that people are able to have the opportunity to get capital, and the investor side are able to make investments in small companies that become big companies and build wealth and have generational wealth creation.
Why do we need I want you to understand this. I want to unpack this in a second. This aspect is important. Yes, many of us understand the aspect of bootstrapping, building your business, using your credit cards, using your mama's money, using your savings, using your 401k, and there's parts for that. But after your company grows and you're a $10 million company, you're a $20 million company, and you want to hire 200 employees, you want to hire 50 employees, you want to hire 500 employees, you want to hire more people in your community, you want to hire more people across wherever you are, you want to invest in getting more buildings so you can, again, make that money spin around, you need more money. You can't raise that money from Uncle Hoo-Hoo. You got to get more money, and oftentimes going to the public markets to do that. And that's what I liked about what the Dream Exchange is building out here. So keep checking and listen to this. I try not to cut in too much, but it's exciting for me. A stock exchange at all, and then why the Dream Exchange?
Well, you're right. When a company starts out, usually it's on the entrepreneur's dime. I've met many people who've put their payroll on their credit cards. And then you work through to friends and family and to angel investors and seed investors and crowdfunding. You can raise $5 million with crowdfunding. And then, there's the world of venture capital and private equity, and they invest many millions of dollars. But there's some attendant problems, which is the why the Dream Exchange. So the first problem that I think a stock exchange addresses is it's a larger amount of money. For more stable companies. So above 5 million. In fact, we've kind of invented is a market niche between 5 and about 75 to $100 million. So those are really good companies. Those are companies that could use amounts of money to expand. Where are you really going to get that? Well, there are very few places to go and land and get that capital. You have to usually have a bigger venture capital firm or a private equity firm, or you might have to sell the whole company to a competitor. So what the public markets, and we've gotten away from this over the last 50 years. Really, it's concentrated in the last 25 years, where a company could do an IPO.
So I want to unpack this. You have venture capital, which is great, but that only goes up to a certain amount. So I want you to unpack and understand this. And this is education we're doing in the Rundown with Ramon. This is the power of an IPO. It's not just for the rich. It's not just for the wealthy. We have that in our heads sometimes, but IPOs are a great way to build community, to invest in community, to have a company build more capacity by going to the public markets and raising funds so they can even do more, and that money can keep circling around and build wealth for more people. This is what it's about. Keep listening again. Those of you who just joined, my name is Ramon Ray. This is the Rundown with Ramon, and I'm so glad you're here today doing an interview with Joseph Sakala, co-founder of the Dream Exchange. You can check the Dream Exchange out at dreamx.com, but keep listening to this amazing interview about a new stock exchange getting ready to be launched with the Dream Exchange. Check it out.
Form capital with the general investing public of the nation. And we really want to bring that back. So it does all the favorable things that those healthy capital markets did. One is forming capital for the companies. And two is, you never hear this expression anymore. Would you like to get in early on an IPO? Because if you can invest in the company in its earlier stages, well, naturally, as the value of the company goes up, you're building wealth. Stock exchanges are the regulators and they're the facilitators of the trading. So when the market goes up or down, a stock exchange, fortunately or unfortunately, they make money either way. Okay. But here's the most important part. Stock exchange can function as a facilitator because it's trustworthy. There are thousands of them. There are literally thousands of companies that are eligible, that are making money.
Did you get that? I wanted you to understand that. Those of you who are wondering, Ramon, why do we need a stock exchange? Part of it is for trust. To be a stock exchange, it takes so much paperwork, so much fiduciary background checking, and more. So a stock exchange is a great way because it provides equal trust in the market. This is the power of why a stock exchange is there. It's a whole nother ball game, but a stock exchange enables a company or companies on one side in the market here, companies that need the funding, to work with investors, institutional investors and others, to take a part of their company, raise a lot more money in the public markets from institutional investors, from individual investors, those who want to be in this marketplace and raise money. So the trust is the power of a stock exchange. keep listening. I hope you're enjoying this just as much as I am to learn something new, as many may not understand about an IPO, about stock exchange as well. Now you're on the cusp seeing about a new one called the Dream Exchange with Joseph Sakala, co-founder of the Dream Exchange. And again, you can just check what they're doing at dreamx.com. Let's keep listening.
That are profitable, that have great ideas, that could use a sizable amount of capital in a public market, but they're not your typical venture capital investment. So a venture capitalist looks at an investment, and before they'll be willing to invest money, they need to see a minimum an increase in value of 10 times. Sometimes they have a bar of 20 or 30 times what their initial investment is. Well, that's not really how your typical public market works. Pretty much where things stand. So what we want to do is invite a lot of those companies that can be a 15, a 20% internal rate of return. That's not good enough for your typical venture capitalist. If they invest $1 today, 5 years from now, they want to have $100. So that leaves a whole segment of companies that are very good companies, very profitable, doing well, that are left out of the game of private capital raising. They're uninteresting to the private capital markets today. But they would be interesting to the public company investor, a new type of stock exchange marketplace that solves the problem, because there's nothing wrong with the national market system or a $1 billion IPO. That's fine. It's not a one-size-fits-all marketplace any longer. There are literally thousands of companies that are eligible, that are making money, that are profitable, that have great ideas, that could use a sizable amount of capital in a public market, but they're not your typical venture capital investment. So a venture capitalist looks at an investment, and before they'll be willing to invest money, they need to see a minimum an increase in value of 10 times. Sometimes they have a bar of 20 or 30 times what their initial investment is. Well, that's not really how your typical public market works. We now open the world of public company finance to the smaller company. It'll be no different.
And this is what excites me. I lowered the volume a bit, but I just want to do an overlay on this. And as this conversation is going on, this is the power of it. The public market that's teaching us a new way to invest, a new way to build wealth by going to the public markets. Many of us don't know that. I didn't realize that. That's the power of what a stock exchange is. Let's keep listening to this powerful conversation.
There are literally thousands of companies that are eligible, that are making money, that are profitable, that have great ideas, that could use a sizable amount of capital in a public market.
And that's the only way it's done. If you're looking for a sizable amount of capital, you're looking to raise funds for your company, one of the only ways to do that is by going public. I'm not saying this is a vehicle for everybody, but I am saying for that startup entrepreneur that's looking to raise more funds, looking to raise more money, one of the ways to do that is by going IPO. And yes, NYSE is good, NASDAQ is good, and the other stock markets there are, but there's these mid-market companies that are looking to get to the next level. And I'm so proud of what Joseph Sakala is doing with the Dream Exchange, dreamex.com. Dreamex.com is doing. I'm going to move this forward a bit. I want you to hear his comments here. I think I can get to the right part about building wealth in America and globally for that matter. Let's keep checking this out.
Has been, I don't even want to call it a challenge, because it goes without saying that that's the entire purpose of who we are. You have to search far in our website to figure out what we're trying to accomplish. It's not a hidden purpose. Public companies create jobs, create opportunity on top of opportunity. The employees, the staff, they all have really sustainable long-term career path occupations in all kinds of things, human resources and marketing and treasury and quality control. You have career path jobs. But even more importantly, when you look at the landscape of the large public companies in our country, most cities brag about, we have 3 Fortune 500, we have Fortune 100 companies in our city. Why? Because those are good jobs, but more importantly, all of the prosperity around a public company creates an ecosystem. So it's a ripple effect. If we can restore a lot of these companies and get capital into them and they do well, there should be a more prosperous, broadening effect on the overall society of our entire country. That's really
This is why I wanted to bring Joseph to you to help him unpack and help us understand the power of having a stock exchange, the power of enabling mid-market companies to grow. I hope you've enjoyed this interview. Again, my name is Ramon Ray. You've been listening to The Rundown with Ramon. Let's keep going on, and I want to bring up a few more topics for you today. Dr. Jeannie Snyder's here. Phyllis, glad you're here with us today. Let's keep moving on in The Rundown with Ramon. But remember, there's a new stock exchange coming up, the Dream Exchange. You can get to know Joseph Sakela and his co-founder, who was actually a civil rights icon. Joseph's co-founder was at dreamex.com. Let's keep moving forward on The Rundown with Ramon. Ding, 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 ding. This is cool. Watch this. A better way to walk for exercise. Those of you who are walkers like I am, Wall Street Journal said, there's a better way to walk for exercise. Yes, we all need to move more. Yes, walking at a brisk pace for at least 150 minutes a week can help you sleep better, improve your memory, reduce the risk of serious conditions like heart disease and more, and help. What's less clear? The right way to pack in those 150 minutes. So the first steps. Doctors recommended paying attention to all body parts needed for walking, even ones you might not think of. So it's not just good enough just to walk. It depends on how you walk. Start with your feet together and more. And again, you can get this insight from the Wall Street Journal. So it's how you're walking that's important. Number two, the footwear you have. Did you know that the right footwear is absolutely important and essential? The fact that walking is low impact and requires no pricey special equipment makes it an ideal weight-bearing workout. So make sure you pay attention to the footwear that you have. The point here, walking is great for us, but you want to pay attention to how you walk and what's on your feet, and you don't just want to just walk. Let's move on here. Ding, 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 ding. Navigating the cost of launching a startup. The cost of launching a startup, writes our friends at Mercury, can vary. Now, I'm not talking about a startup where it's just you building, a little lemonade stand here, but as you're launching your first startup, you need to explore what that is. And there's understanding different type of costs associated with your startup. There's one-time costs versus ongoing costs. Maybe you bought a $50,000 machine, $10,000 machine, you bought a stapler. That's a one-time cost. But ongoing cost, if you're running an e-commerce company, you have your fees to your providers, your credit card fees, and all those kind of things, which of course will go up and down depending on what's being run through the system. But the point is, one-time cost versus ongoing cost, understand the difference. Fixed costs then versus variable costs. Your fixed costs are like your rent, your lease, things like that. Usually that's to stay relatively the same year to year, whatever. You can manage that more. But your variable cost, the more employees you hire, the more XYZ things, the more revenue, the more you make sales, the more your credit card fees may be. So understand your fixed costs versus your variable costs. Essential versus optional. Some costs you have to do, some costs you don't have to do. Then there's some common startup expenses. Again, this is our friends at Mercury.com. Incorporation costs, office spaces, payroll, websites, marketing, inventory, equipment, and more. There's the tax deductible sides of having your startup. Are they tax deductible? Are they not? These are things we need to understand as we're starting a business. If you're not focused on what are the costs and what are not the costs, Dr. Jeannie, if you're not focused on what's the fixed cost, what's the variable cost, Phyllis, it's not going to be so great for your business. So we covered the aspect of startup costs. Moving forward here on The Rundown with Ramon. Ding, 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 ding. Have you ever been on a flight and people are like, oh, they called group one, and then all these people rushed up and you realize you're looking at their border, looking at their boarding passes or their phones or something, if you can see that far. And you realize they're not in group one, they're in group three, they're in group four, where airlines call these, what is the headline here? Gate lights. That's a term I wasn't familiar with, but airlines are going to be enforcing this. You people, you're in group three, and they call group two. You need to sit down and wait. They're going to be calling you out and telling you to sit more to make the line more efficient, which I do think is a good thing. Adobe says creators must embrace AI. I don't know how you feel about that, but I'm curious. How do you feel about companies putting AI in their software and forcing you to use it even if you don't want to? I think it's something the early people are going to complain about, but at the end of the day, AI is here. AI is not going anywhere. We all are going to have to get used to it. Ding, 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 ding. Guess what? Ernst & Young fired employees who were caught not quite cheating, but Ernst & Young said, hey, for a part of your personal and professional development, we want you to take some training courses. As you take the training courses, you're going to get points and things towards your career. Some of the employees would put these like training courses in tabs and just run them by themselves to quickly get up points to advance their career, which means they weren't learning. Ernst & Young, EY, I think the name is now, said, you're fired. What would you do? I think they kind of made the right decision. Character and attitude's important. You got an employee that's cheating, even if it's a small little cheat, it's still cheating, people, right? So I want us all to consider that. Listen, this is the Rundown with Ramon. My name is Ramon Ray. I'm so glad you've been here today, and I hope you've enjoyed this episode where we do one thing and one thing alone. Let's help you live your best life or start to grow your business. Check us out again on the next edition of the Rundown with Ramon. We want to make sure that your life is fully fulfilled. Go and call somebody, text somebody, DM somebody today, and let them know that you care about them. Let them know that they matter, because we need the world full of people that will make an impact in the lives of other people. Again, until next time, I'll see you on the next edition of the Rundown with Ramon. Have a beautiful, beautiful day. Thanks for being here. And that's a wrap. Thanks so much for being here on the Rundown with Ramon.